traders, and welcome back to Smart Money Insight. So this is going to be a channel where we break down the sentiment of the smart money in the stock markets. My name is Rein, and today we would like to dive into the Alphabet's Google recent stock plunge, and the question is, was it an overreaction? Or this is just a beginning of a bigger fall? This all started on Tuesday, February 4th, when the Alphabet latest quarterly earnings revealed for a slower cloud growth and massive AI-related spending. And the result? Well, a sudden 7% gap down in stock price. At the same time, there was an announcement coming from China about a retaliatory antitrust probe into Google, which coincides with the new US tariff on Chinese goods. If we take a closer look about the company's detail, we realize that the total revenue of the company, they grew about 12% year-on-year to about $96.5 billion. While for the Google search advertising revenue, they rose about 13% to about $54 billion, which I would say it exceeds the expectations. But well, for the cloud revenue, yes, it slowed down to 30% growth, which compared to 35% previously, but that will still hit nearly about $12 billion. So only slightly below the forecast. I agree that the earning reports might shook investors' confidence, but I would say that these factors alone do not justify such a sharp drop in the Alphabet stock. The real game changer here might be the China surprise revival on the antitrust probe into Google. The timing here is also critical. This investigation was announced right after the US imposed new tariff on the Chinese goods, making it look more like a geopolitical move rather than a standard regulatory actions. And this is not just a simple fine or a routine compliance check, but this, I would say, introduce a potential long-term risk for Alphabet global business. But here is the silver lining. Right now, we are talking about the antitrust investigations, not a national security risk investigations like what happened to Micron. This distinction, I would say, is pretty crucial here because this suggests that there is a possibility of overreaction towards the news, and this sets up for a potential rebound. And here's the reason why. First, talking about the Alphabet stock, it had risen about 40% over the past year, meaning that this recent 10% drop likely a correction rather than fundamental breakdown. Second, we also seen a similar case where there is this AI-driven pullbacks coming from Meta, Microsoft, and also Nvidia. All of them face a sudden sell-off when AI-related spending spook off their investors. But I believe that as dust settles, the market often refocuses back on its fundamental, like Alphabet's strong advertising business, AI potential, and also the potential for the cloud growth. Now, the third one, right now the stock is approaching for the support level 1, where there is a potential rebound, or the rebound might occur at this level. The key question here is, how is smart money positioning itself right now? So we need to analyze the sentiment of the smart investors to understand and to gauge whether the stock will rebound at this level or how high it might potentially rise. However, when the stock fails to rebound at this support level 1, then this seems that support level 2 can act as the next safety net. Well, before we dive into the Alphabet smart money analysis, make sure you like, you subscribe, and hit the notification bell so you never miss out any key trading opportunities in the stock market again. So let's get started.
Let's talk about Google from its option behavior perspective. First, let's take a look at the top chart, which portrays the implied volatility smile chart of the stock. As usual, the x-axis represents the strike price, while the y-axis represents the implied volatility. The put option is represented by the blue dots, and the call option is represented by the red dots. This is the typical, almost symmetrical implied volatility smile, which indicates that the fear of a drop in price is roughly equal to the expectation of a rise in price. The implied volatility of the put and the call options in the region close to the current stock price also show the parity of fear against greed. Now, the volume tells a different story. When it comes to betting on the price move, more traders are betting that the price will move up, as shown by the fact that the volumes of the put options are considerably less than the volumes of the call options. That is clearly apparent at the strike price 200. This may indicate that many traders believe the price will move to 200 and beyond. Looking at the open interest chart at the bottom, there is no appearance of a strong support level. That may suggest that if the price should drop, there is no technical level which may act to support the price. On the other hand, there is a resistance level at the strike price 200, which may act as the barrier to slow the price hike. Now, let's look at the resistance at the price chart. I would put that the option market is giving this stock a current bullish index of 0.708, where 0 is for total bearishness, while 1 is for total bullishness. Please note that this sentiment reading is taken from what's reflected per February 7th closing market. And like what wise men used to say, all boats rise and fall with the tide. So that is all the analysis for today. See in the next one and trade smart.